Welcome back to Yahoo Finance Live. You're looking at stocks holding on to gains, at least for the Dow and the S&P. The Dow up 267 points here as we kick off the final hour of trading amid that ongoing volatility in the banking sector. First Citizens deal to buy parts of Silicon Valley Bank. Well, that's helping the market jitters just a bit with a number of the regional stock plays holding on to gains. Let's talk about it with Joyce Chang, JP Morgan's chair of global research. Joyce, it's good to see you here. So what do you make of the fact that the market has been very resilient given all the chaos and the turmoil playing out within the banking sector?
Well, great to be with you. Well, the financial markets here are really signaling that they think that the stress in the U.S. and the European banks will be contained because central banks are willing to use the lender of the last resort tools. So I think the fact that the policymakers have acted quickly, that you already see measures that are being discussed in the Congress with solutions coming up, has really made this one where the risk of a systemic crisis is not seen as actually being that severe.
Today's action from First Citizens, does that signal to you stability moving forward and maybe this game of whack-a-mole in the banking sector is over?
I don't think that the tensions are going to be resolved that immediately. I mean, we're going to continue to see a tightening in credit standards, a slowing in the growth that really does look like past recession dynamics. And there's also going to be a focus on the commercial real estate market because you have a commercial real estate mortgage debt outstanding that's about $4.4 trillion, and nearly 40% of that is held by U.S. banks. So I think that the tensions are still going to be there. The liquidity concerns have been addressed in large part by the policymakers, but the whole issue of the credit losses, the feed through to the real economy, and not to mention, just the, ongoing, scrutiny and regulation that will be forthcoming are all going to continue to weigh on the markets.
You referenced commercial real estate, which is really a concerning sector for many. And Goldman Sachs reports that 80% of the bank loans in commercial real estate are all in the regional banks. What lies ahead for regional banks? I mean, for commercial real estate, do you believe?
Well, I think that, look, the MBS market is at the center of this particular crisis because banks of all size, large banks, regional banks, have hefty agency security exposures. So when we take a look at the commercial real estate market, I mean, what we see are maturing loans across the commercial real estate ecosystem that are almost $450 billion this year, and 60% of that is held by banks. So I think that, the CMBS market is more than 20% of commercial real estate. There's about 185 billion of that's exposed to the office market, which is seen as having more vulnerabilities given the high vacancy rates. So I think that the first leg of this was the liquidity crisis and what the policymakers could do, but commercial real estate is going to be the next important point of scrutiny, I think, by markets.
Let's also talk about what investors have been favoring, given the fact that there's so much uncertainty out there. We certainly have seen a lot of money been poured into money market funds. When you take a look at some of those recent numbers, it's the highest number that we've seen now in quite some time. What do you make of this move, the fastest rate here since COVID? Is this something that investors should be considering?
Well, I mean, look, uninsured deposits were, $7 trillion. So, of the 17 trillion, 7 trillion was, basically from uninsured. And so you've had a mix of this going to the large GSIB banks and also to the money market funds. And I think the market will be looking very much at, just are you going to see some resolution, mechanisms as well? So we've had liquidity being addressed, but you still have, the fears of, future credit losses, resolution mechanisms, which banks could potentially be merged. So I think that you're going to see that some of these outflows have abated compared to where they were in week one, but we still have that risk of outflows continuing. And so I think markets will, continue to see these tensions for some time.
All right, Joyce Chang, really appreciate that. Thanks so much.